You are listening to ChartingWealth.com for Tuesday, the 13th of December, 2016. Markets were subdued and down a little bit for the day, but we still have strong uptrends in place, both on our weekly and our daily two-day trend lines. We saw that the half-day trend line down a little bit for the day. Now, that has not changed where we are in the markets. We can see what happened is the market was up in the morning and then down some in the afternoon. Could be losing some of its sweetness, hasn't crossed over yet, going down. Derivative oscillator has lost energy on that short chart. But when we look at what's going on our two-day chart, we're still well above the weekly trend line. We're well above the two-day trend line. And what we see happening is we paired off a little of that exuberance that caught up with things on Friday on our two-day candle. When we look closely, we see that our PPO, that is the price percent oscillator, is still angling up. It hasn't flattened at all. We see also that we had a little growth in our derivative oscillator too. So it didn't lose any energy. So we still call this market up, and until things change, we will do that. That is IYY, the total market. Now let's go to the S&P, and for the record, down 0.19%. The S&P 500 down even less, 0.13%. And again, still strong uptrends. Two-day trend is up, week is up. And we just had a little pairing off from the exuberance on Friday. Derivative oscillators continuing to gain energy. And the PPO is pointing up, actually kinked over, going up back on the candle ending on the 6th. After that, it really turned and fired even further up. That's the 6th of November. Let's look intraday, see what we see. And again, we see could be a topping out. We had a lot of exuberance in the morning, and then things fell off in the afternoon according to our Heiken Ashi. Now, we do see a bit more of a slowing down in the 4-hour chart as far as the PPO goes. It is actually kinked over and not rising at the rapid rate it was before. We're also seeing our derivative oscillator lose energy there. But again, the bigger chart, which is where the real power is still strong. So we'll continue to watch. Again, if you jumped in at the right point back on Wednesday the 7th in the afternoon, don't lose all of your gains. You can sure pair those off, sell half your position or so, and put some of those gains in the bank, or just continue to ride things out and see how good the market will be to you, or if it'll take it all from you. Again, this is all about practicing, learning how to trade, learning how to read these charts for all the different times of year. So that is where we are on the S&P 500. Going to range back out to our two-day chart. And we're going to take a look at the Qs. That is QQQ. That is the NASDAQ 100. What do we see going on there? Well, the NASDAQ 100 down 0.45%, down actually more than the S&P 500 and IYY together. Now, don't forget, we're in a confirmed down move on the weekly chart. We're not able to draw a trend line because of the past up movement, but if we look at our weekly chart, we can see that we're still in a confirmed down move. At some point in the near future, there may be a crossover going up. Hasn't happened yet. The derivative oscillator continues to lose energy, and the MACD, or the PPO rather, the price percent oscillator, is moving up toward that signal line. But if we look on our two-day chart, we see that indeed that exuberance continues to be there. We're still well above the two-day trend line, and the derivative oscillator is gaining energy. If we look intraday on the 4-hour chart, we see that it was a down morning and afternoon. So continue to watch. We don't have the PPO even heading down yet. It's not really even paralleling, still moving up a little, although derivative oscillators lost some of its energy. So continue to watch. We had a great jumping in point on the afternoon of Wednesday and a lot of upward movement. The market just may be digesting that. So keep an eye on these charts as we continue to move through the week. 0.45% is what the market was down today in the NASDAQ 100. Lastly, we're going to take a look at gold, which is up 0.36%. Remember, gold is in a confirmed down move on the weekly And the daily, it is losing some of that downward momentum on the 2-day chart. I'm sorry, I've said daily twice now. On the 2-day and the weekly, we do see that it is losing some downward momentum on the 2-day chart, although the MACD, the PPO, is still heading down. Now, if we revert back to our half-day, intraday chart, looking at what's happening every 4 hours, we see there was up movement in the morning, followed by a little bit of subduedness there in the afternoon. So what is actually going on with gold? We've had a crossover going up on that 4-hour chart since the 2nd of December, but as we've talked about several times, our 4-hour chart has stopped working very well for us. Again, if you see the 4-hour chart cross over and start moving back down, the derivative oscillator has already crossed over into the negative. If you see that happen, you could attempt to play on the down move because both our weekly and our 2-day charts are there. But again, gold has been trying its best now for many days since the beginning of December to try to seek a bottom. So we'll see, maybe not, maybe it'll just continue to drop off further, but feel free to play that. Remember, we want to practice. That's what we are all about. We're an education firm. We're not a stock calling service. We want to teach you how to read these charts so that you get good at it. Then and only then do you even think about spending your own money, and that's your own decision. We are not a stock calling service, but we want you to learn how to read these charts. Once you get that charting knowledge and you develop that skill set, the world is truly your oyster, and you owe it to yourself to spend 10 minutes with us every day, practicing. Just 10 minutes. Fill out that daily market worksheet. Keep up with us every day, and before you know it, you'll be able to read these charts, and you'll be able to enter into and successfully get out of virtual trades. And once you become a master of that, hey, then when you think you have the skill set, you can switch over and spend your own money however you like. That is where we are at chartingwealth.com. Thank you so much for being with us. You appreciate what we do. Ask you to do 2 things for us. First, go to iTunes, subscribe to our podcast, give us a 5-star rating. Those metrics really help us. You guys have made us as high as number 6 in the world in stock market podcast, and we so appreciate that. Also, go to YouTube, sign up for our channel. It's one of the first places we upload all of our information. Now, don't forget, the first place we do is we send out those emails to the people that subscribe to us at chartingwealth.com. What does it cost? Nothing. Just go in there, put in your first name and your email address, and we will send you the video blogs as they are ready. We'll fire those off to you every day, plus the comprehensive review and forecast that comes out over every weekend and encompasses our Monday podcast. God bless. We appreciate you being with us. Thanks so much from chartingwealth.com.